Hello and welcome. This is Roy. This time I'm sharing with you a clip taken from 67 minutes video that I've just finished to record for my subscribers. The clip is focusing on a central market in the bonds market, the Japanese bond markets, the government bonds. We had some dramatic development in the last few weeks, and I think it really merits all the attention. If you're interested in the financial markets, it doesn't matter really which markets exactly. You need to be aware of what's going on in one of the most important bonds market on the planet. If you're interested in also knowing what is likely coming in the stock market, I have some very specific and measurable, if you like, measurable projections that I share with my subscribers. You can have access to all of this information if you just try out my website. Go on my website and check it out. If you have any questions, don't hesitate to contact me. Other than that, I wish you have pleasant viewing and good trading. Bye now. And here's the long list of charts that I have. I have the dollar index, the euro US dollar, Australian dollar US dollar, New Zealand dollar US dollar, British pound US dollar, and then British pound Chinese yuan, gold, silver, Brent crude. I'll have a look at the bonds in the US, the TYX, the TNX, the UST bond. I'll have a look at 10-year government bonds of Japan. Some dramatic price action there that definitely requires our full concentration, because as you know, the Japanese have absolutely astronomical amount of debt. Okay, and then I will be looking at the stock markets. I've got the Dow Transportation Average, the Dow, the S&P 500, the Nasdaq, the FTSE of the UK, CAC 40 of France, the DAX of Germany, the Greek Composite Index, the Russian index, the RTS, and I'll terminate the video with a look at the mid-cap of Bombay, done with the Japanese bonds. Since I don't have the data feed, I used to have it. I don't know what happened. Maybe there's a technical problem, but anyhow, this information is just far too important to ignore. This is the chart that I've actually took out of a website that is called Trading Economics. They have plenty of information for free. So do www.tradingeconomics.com and you will see what I mean. It covers the whole world, and you can get a huge amount of data for free. Not all the data is updated to the last tick because they have also paid service, so it's very, very expensive. Things running into thousands of euros. You don't have to pay that much to find quite useful information in its website. Here's an example. This is the 10-year, yes, the Japanese government bonds 10 years, and it goes from 1984, January 1984 to May 2013. I'm not exaggerating if I say that this could be the most important chart in the world. Because, look, I'm not an expert on bonds, but from what I know, the Japanese have lined up an astronomical level of debt tied up in the government bonds. And it is not a secret that the Japanese have been monetizing their debt for years. And if we see now a historic reversal, for whatever reason, the Japanese economy finally beginning to rally, finally awakening, whether because they are doing everything to destroy the currency and trying to get the engine working again, whatever the reason is, if the bonds market in Japan is going to start falling and interest rates are going to run up, and I can show you that what happened in the last 6 weeks or so is truly alarming. Is truly alarming because rates doubled, just like that. Rates from the all-time low, from the bottom, in 6 weeks doubled. Now, what's going to take to confirm that we have an historic bottom here in the Japanese bonds? Will be a run above 2. Looks like it's very far, but it's not really. I'm going to show you the the next chart, you will see what I mean. So that will confirm, I would say, a monthly close above 2 will confirm that this is the right wave count. That's taking, this is a 1 2 1 2 3 4 3 4, hit the floor, didn't go substantially under this. Maybe we had a failure here, or maybe my wave count is missing something. But in short, I think running above 2 would be absolutely incredible signal, not just to the Japanese market. It'll be a signal to the rest of the world, because that's going to either coincide or be a leading indicator to some catastrophic collapse in the bonds. And there are just a lot of people waiting out there for the bonds to collapse in the US, and I'm sure also in Japan. And there could be their wait might be shortened soon. Now look what's going on here. You can get this chart from Bloomberg. I got it from Bloomberg. It's showing you the last year price action here, and you can see clearly, yeah, it's a 10-year simple yield, and look what happened. This is April, first week of April, and I can see here 1 2. Just look at that. That was the third wave. That was the third wave. That's when the Nikkei crushed that big fall that the Nikkei had. That coincided with rates basically shooting up. Now, if you look carefully, it is well under 5. Yes, I think I don't know exactly the figure. Was it 45 or whatever? Looks like it was probably 45. And look here, it almost touched 90. Do you see? It doubled in the space of 6-7 weeks. Doubled. Now, this kind of acceleration is alarming. And it will become even more alarming, and given to some sensible analysis, if we get further surge here after it completes a fourth wave. Meaning, if it doesn't sag back towards 0.65, yeah, right here, 0.65, it doesn't sort of slumps back down here, then staying around here, and it is already impressive that it managed to rally and maintain the gain so far above overhead resistance here. You see it around 0.8, 0.7. This is already quite an achievement. It hasn't managed to do that for many months. Look, for many months we had this building up, and now it came back and it managed to climb just above and close. This is serious. And if we have a fourth wave, we have another run, we have something to work with. We have 5 legs. This could possibly be the first leg of that historic bear market in the Japanese government bonds that so many people have been waiting for such a long time. And as I said, the Japanese build up an astronomical level of debt, and there are people who are more qualified than me to discuss the nitty-gritty of this. I just know from from reading the big picture, this is something that is going to leave no stone unturned around the world. It will definitely have a huge impact, and that's the bonds market. Okay, just to clarify, I don't think that if interest rates rise, whether in Japan or in the US, that will necessarily kill the stock market. No. I think that in the US or in Japan, if rates rise, the ideal scenario if they rise moderately, we don't have a crash, because a crash will definitely destabilize all the markets, also the stock market. But the idea is that when the rates rise, it's also because the economy could be doing better. If the economy is doing better, people demand more money because they want to invest. When they want to invest, rates rise. It's demand. Demand is coming for money, then you have to pay more. The more people are lined up, the line is longer. The higher you pay. So it's not necessarily very negative for the stock market, but as I said, a really huge crash in the bonds is not going to escape the. It is going to impact. It's going to impact everything. Okay, now we'll have a look at